Silicon Valley Bank has collapsed. It had assets under management of $216 billion. It was the 16th largest bank in the US, had 8,500 employees around the world, was a 40-year-old institution. 44% of every venture capital-backed tech company in the United States banked with them, and now they're gone, and it all happened overnight. We just witnessed the second largest banking collapse in American history, and so the question on everyone's mind is what's next? Contagion, how bad will it be, and are we safe? This video is going to explain exactly who is impacted by this collapse, what we might see next in terms of bailouts or even bail-ins, and finally, which other banks appear to be on the brink of bank runs and a collapse as well. Now, if you need a recap of what's happened so far, then check out my previous video link down below. But really, if you don't know what's happened so far, then you need to sign up for Stoic Markets, my 100% free newsletter, because I can give instant updates and news alerts for banking crises just like this one. And so Stoic Markets subscribers have been kept far more up to date on everything happening than 99% of everyone else. So check out Stoic Markets for free in the link down below. Now, who is getting hurt the most from Silicon Valley Bank's demise? It is, of course, their own customers. Their customers were mostly tech firms who had raised huge amounts of capital over the last couple of years as interest rates were 0% and free money was just floating around. It's basically become a running joke that it was too easy to get funded as a tech startup, with hundreds of companies being funded with millions of dollars as pre-idea stage, which means the company didn't even know what its business was going to be, but investors still threw money at the founders anyway. On the low end, most of SVB's customers had a few $1,000,000 in their accounts, meaning only 10% or so of their cash was protected and insured by the FDIC or the government, but some customers had hundreds of millions in their accounts and some even billions. When the numbers get that high, less than 1% of the capital is actually protected and safe, and these are not just random numbers that I'm throwing out here willy-nilly. Roku, the streaming service, has announced that it had $487 million in their account with SVB, meaning they lost $486.75 million from this collapse, or 99.95% of their deposit. Roblox has announced they stored about $150 million of their cash in SVB, which means they lost 99.8% of their deposits. Circle, the company which manages USDC, one of the largest stablecoins in the world, which is imperative for liquidity in the crypto market, it's revealed that it had $3.3 billion in their SVB account, of which 99.99% is now gone. Of course, these are some of the worst examples of losses, but most of these companies had at least split their cash up between multiple different banks, so even though the losses are massive and a huge issue, these companies do still have more cash to fall back on, so they aren't going to collapse tomorrow. Not all companies are so lucky though. This Twitter user posted a celebratory tweet just 1 month ago announcing he had managed to secure $5 million investment for his company, and following the collapse of SVB, he also announced that all $5 million had been stored at SVB and that 95% of it was uninsured and therefore lost. Oh, and this was their only bank. They have no other cash at all. Of course, he's crying for a bailout, stating that those impacted aren't the 1% as the media likes to portray, but more on that later. Now, the first line of those actually impacted by SVB's collapse are the people, businesses, and investors who banked with SVB, of whom the vast majority had balances far in excess of the FDIC insured limit, and we should expect losses on this front well into the billions. Contagion on this front is therefore very likely. The employees of these businesses, well, they probably aren't expecting to get their next paycheck right now, and many of them might not even be turning up for work Monday morning. SVB itself has 8,000 employees, all of whom are basically out of a job, and should no bailout support come for the crisis, we can expect the number of layoffs in the immediate term to be in the tens of thousands. I only mentioned 4 companies who have lost substantial portions of their cash so far, but there are literally hundreds of others out there. The next major question when it comes to contagion is which bank is next? Will they all fall or none of them? Now, we already know that SVB wasn't actually the first bank collapse last week, as Silvergate, a bank also based around tech firms, but more specifically around crypto, collapsed just a day before SVB. Silvergate was a smaller firm, but they still controlled about $12 billion worth of assets, and their 500 or so staff are out of jobs too, so it isn't something we can outright ignore. Now, are other banks at risk of contagion from this too? Well, the market says yes, but not all are equally at risk. The largest banks, the multinationals whose names we all know and hate, Goldman Sachs, HSBC and the like, they all saw their share prices fall by something like 5% while trading was open on Friday, and the reason for this is very simple. All these other banks are suffering from the same underlying underlying problem that took down SVB. They own billions of dollars of bonds, and those bonds have lost 40% of their market value over the last 2 years. While the banks remain solvent, this isn't an issue, but should they need liquidity and have to sell those bonds, they will realize their losses and suffer the same fate as SVB. The giants are less likely to find themselves in this position. JP Morgan and the like are far more diversified than SVB was, so even though some of their business has taken a hit, they don't appear to be close to failure, and these big names also tend to place inflation or interest rate hike hedges into their portfolios too, so they aren't as likely to collapse right now. These more nameworthy institutions have also put into place much stronger protocols that seek to hedge against interest rate increases than SVB did, which means they'd need to see a much tougher economic environment for this specific issue of falling bond prices to take them down. Now that is the good news. It seems for now these blue chip banks are probably not going to collapse tomorrow. Once again though, I need to explain that when I'm making this video for YouTube, it usually takes about 2 weeks, but in times of crisis like this, I'm able to expedite that process and get it down to about a day. Even at a day though, that still means you are learning about these problems, these issues, bank runs and collapses too late, and the only way I can ensure you find out what is happening when it is most important is through my email newsletter Stoic Markets. The truth is, I can write and release a newsletter within literally 1 hour that can give vital context and information on everything going on in the world, and I don't have to wait for video editors or YouTube to process and approve a video. If you truly want to know what's going on and you want to have your information be as up to date and reliable as possible, then sign up for my free email newsletter Stoic Markets down below. Those who are already signed up already had all this information prior to this video being released on YouTube, and they're going to continue to have better insights and knowledge into this crisis than anyone else. The newsletter is 100% free. You can always unsubscribe if you decide you don't like it later, but it could quite literally be the difference between you getting caught up in a bank run and getting your cash out safe before anyone else even knows there's a problem. So once again, check out the link down below in the description and join Stoic Markets for free. Now this is where things start to go bad, because many banks out there are not JP Morgan and they are suffering as we speak. First Republic Bank is another American bank that mostly serves California. They are about as big as SVB was, holding 180 billion in assets and making just under 2 billion in income a year, and they also cater to wealthy clients. At the point of me speaking, there is some evidence to suggest a bank run is occurring literally as we speak. Footage has emerged of people lining up outside the banks in the rain in an attempt to get their money out. Their stock price fell by 33% over the last week, far more than Goldman Sachs' 5%, and as they cater to a wealthy niche, 80% of their deposits are uninsured by the FDIC, which would mean a bank collapse could cost customers tens of billions, just like we saw with SVB. Now, I have now managed to speak with an insider who works with First Republic, and according to him, their wire transfer capacity was at its limit, but it's being increased, and this was a technical issue and not representative of any liquidity issues. I'm afraid that at the moment though, I cannot confirm that. The information regarding First Republic really is just rumors at this point. This Twitter user Mike Alfred is reporting that the FDIC are already on site at First Republic trying to stop a bank run from truly breaking out, and he's also claiming that First Republic have stopped processing their wires, but I haven't seen any evidence proving this either. Now, if there wasn't a bank run or liquidity crisis for First Republic before the SVB collapse, there may well be one now. All of their customers rushing to take out their money is exactly the kind of thing or event that could force First Republic to have to realize billions of dollars in losses on their bonds, and that's exactly what happened with SVB. At the moment, we really can't tell what's going on, but the narrative that the legacy media is pushing is everything's fine and there's nothing to worry about, and I do not believe this at all. I would be incredibly careful trusting this narrative without evidence to suggest that it's true. Now this here leads us on to one other massive problem here, bailouts. And following 2008, the taxpayer, as we all know, was forced to come to the rescue of the bankers to the tune of trillions of dollars, and it seems like the exact same thing is going to happen. Now the first thing to note is that the messaging is incredibly mixed, so it's clear even the government doesn't actually know what it's going to do yet at this point. Treasury Secretary Janet Yellen outright said that the US government will not bail out Silicon Valley Bank at all, in a message that could not be more clear. She said, and I quote, "The reforms that have been put in place means that we're not going to do that again." But then she also came out and said that SVB investors do not need to worry and that they will get all their money back, even that which is not insured by the FDIC. What does this mean then? Literally no one knows, because that would be a bailout, yet Yellen just said they weren't going to bail the bank out, but she also said the bank basically can't collapse because they won't let it. So is the US going to bail out SVB? It seems maybe yes, but they're going to claim it isn't a bailout, much like how the US government released data showing that the US was in a recession, but they just claimed it wasn't in a recession and changed the definition and hoped no one would look any deeper. Now, on the other side of the pond, governments seem to be in a similar situation, claiming that all is well and they'll help those affected by the bank collapse, but this also isn't a bailout, of course. The UK government is preparing cash injections for the British tech companies hurt by SVB's collapse, and there's even a chance that the UAE, the United Arab Emirates, and one of their funds might buy out the bank or part of it to keep it solvent. Bailouts then are on the table, but we don't know which way they're going to slide yet. This is worrying to many, and for good reason. If the banks crash our economy, it's screwed, but if we bail them out, our economy is still screwed. Essentially, we're witnessing the turkeys coming home to roost. The problems the markets have been collectively ignoring for the last 10 to 15 years can no longer be ignored. Investors and depositors are running for the doors, and it seems like we really are on the brink of a depression. Now, just as an example of how difficult it is to get up-to-date information out on YouTube, literally halfway through recording this video, I received a ping stating two things had changed. Firstly, Signature Bank has just been closed down by US New York State authorities. I literally had to stop recording this video, find out what was happening, and add this part into the script of this video, because this bank literally collapsed 5 minutes before I'm recording this video at about 10 p.m. here in the UK. Now, the second piece of information is that the Federal Reserve announced a new emergency bank term funding program to try and stop these bank collapses. This will be focused on depositors, not equity investors or shareholders. Now, they will claim this is not a bailout, but that is a lie. This may be paid for with printed money, not with taxes, but the wealth to pay for this emergency bank term funding program, that comes from taxpayers and no one else. Another massive concern is that the FDIC actually doesn't have enough money to cover all of the FDIC insured deposits in the US. And now we're finding out that actually the FDIC is going to insure every deposit in the US, which goes into the trillions, which the FDIC can't even insure 2 or 3% of. What this means is that if these bank runs and collapses keep happening, this emergency funding program will itself go bankrupt. The hope from the Fed's point of view is that this action provides enough confidence and stability to people across the country that they will stop withdrawing their cash, and this stops bank runs from happening. But this is the next financial crisis. If you're new to this channel, then you probably don't know this, but I've been exposing and shedding light on the problems within the banking sector for months now at this point. And for this entire time, people have continuously asked me, where's this bank crash that I keep predicting? The fact is that it is here. There is no denying it anymore. 3 American banks have collapsed over the course of less than a week, holding assets worth well over $250 billion. If you want to keep your head buried in the sand and increase the chances of you losing everything, then be my guest. But if you want to give yourself the best possible shot at success, if you want to make sure you know what is happening when it happens and not when the legacy media decides it's time to let you know, then you need to sign up for my free newsletter, Stoic Markets. If you want to learn how I actually predicted this banking crisis, how I invest and make money even when stocks fell throughout all of 2022, then check out Stoic Financial Freedom as well with the link down below. There's a special offer for Stoic Finance viewers only, specifically curated for you and at a massive discount to the full price. Or if you just want to see the original video explaining what's going on with Silicon Valley Bank, then watch this here.